It's time for the Brian Beatty Real Estate Show.
Good morning, Charleston, and welcome to another edition of the Brian Beatty Real Estate Show here on the Big Talker, 1250 WTMA and WTMA.com. Thank you so much for joining me, whether you're listening from your car or at home, or you watch our YouTube videos or listen to our podcast. We appreciate you being here this morning to talk about the real estate market and help you guys understand what's going on right now. I think the next 60 days of our market are going to be a significant telltale sign for how the rest of this year is going to go for us. And one of the questions that I'm getting asked right now is, where did all the houses go? Right? We don't have really so much of a demand problem right now. We have a bit of a movement problem. And so, people want to buy, but current homeowners aren't selling, right? And so today, I want to talk about a solution that is starting to gain some traction. It's being discussed at the national level. It's something that could dramatically increase housing inventory, and it could do it almost overnight. It has nothing to do, by the way, with building more homes. It has everything to do with tax policy. So we're going to talk about that for just a little bit. We're going to talk about the market in general, and then I'm going to give you guys some things to keep an eye on as these next several weeks unfold, and we really ramp up to what's the most busy time of year for us, which is that spring market, right? April, portions of May. It's where we see the most activity. And so where are we headed? Are we headed in a direction that's better than this time last year? Are we stalled? Are things going down? What's the direction look like right now? How are we compared to this time last year? I want to give you guys some ideas on what to watch for, for those of you that maybe like following the market on your own. I'll give you some things and some metrics that I follow and how I incorporate that into my conversations with my clients so that they're informed and so that we've injected strategy into the conversation to help them, whether it's buying a home, selling a home, both investments or property management. So let's talk a little bit about kind of this hidden reason that people aren't selling. And obviously right now, you have a lot of people that are in this quote unquote lock-in effect, right? They would love to downsize. They would love to relocate. Or they'd like to just simplify their lives, but they don't, because selling could either cause them to lose an incredible interest rate and therefore very affordable payment on their house, or, and this isn't what's being talked about very much, is they have a large capital gains tax bill that might be due, right? And so if you think about capital gains, I mean, the law hasn't changed since 1997, but the real estate market sure has changed since then, right? So right now, under Section 121 of the tax code, if you are a single filer, then you can exclude up to $250,000 in capital gains if you go to sell your home. But if you're married and you file jointly, you can exclude up to $500,000. But you have to have lived in that house for at least 2 of the past 5 years as your primary residence, right? And so sounds reasonable until you realize the fact that, that cap was set in 1997. Since then, home values in most markets have tripled, quadrupled, even more, right? So today, longtime homeowners, especially those who bought, 15, 20, 30 years ago in emerging markets or in areas like Mount Pleasant or downtown or anywhere in Charleston almost, you could easily exceed that exemption, whether it's $250,000 or $500,000. And what's interesting is that in Charleston, as somebody that's lived here for 25 years and sold real estate for 20 of those 25 years, the increase in home values over time puts, it makes me feel a little old at times in that I've been doing this for a while. I mean, 20 years is, I'd say that pretty much qualifies for a full-time career. Hopefully you do as well. But the massive increase in value over time is astounding. It's shocking. And so when people take a look at the cost associated with the sale on a home that's maybe appreciated $600,000, $700,000, $800,000, $1 million plus, and then they go to sell it, suddenly they take a step back and realize, wait a minute, this is going to be a lot more expensive than I anticipated. So instead of listing their home, they just stay put. So the two big proposals that are kind of in play, at least right now, are number one, the Middle Class Home Tax Elimination Act. And then there's a second one called the No Tax on Home Sales Act. And so basically what these proposals would do would to be to either increase the exemption, right? A lot of people are saying $2 million is the new number that makes sense for a lot of folks. So if you've earned, $2 million in value over time or from your basis, then that would be exempt from capital gains taxes. They're also, of course, talking about eliminating capital gains tax entirely on primary residences, which would be very interesting. Of course, there would have to be some sort of time frame, I would think, kind of like there is now, where you have to have owned your home and lived in it as a primary residence for at least 2 of the past 5 years in order to qualify for that. But at the end of the day, they're just talking about modernizing a rule that just hasn't kept pace with today's housing market. And the goal is very simple. It's to encourage people to move again, right? And on one hand, the last thing I want is a government incentivizing real estate transactions. But this is an example, I think, where it makes a lot of sense to increase that exemption from $500,000 to say something like $2 million, just to bring it up to today's real estate values. I mean, that's not going to help anybody in California, as an example. All that real estate's expensive. So why does this matter, right? Why does this matter for inventory? Because when homeowners don't sell, inventory freezes, right? And the average homeowner is staying in their home for longer and longer than they have in past decades. In most established communities, their ownership averages from 10 to 12 years. Now, think about the number of folks that have lived in their homes for more than 10 years that exist in Charleston. There are a lot of them, right? In Mount Pleasant, as an example, people have owned their homes on average for 12 years. It's 11.8 is the actual number. But there are 3,500 individual homeowners with properties that are worth at least $1 million that have been owned for at least 10 years. I mean, there are tens of thousands of properties like this spread out across our market. And that's just one little blip on the radar when we compare that to the national market. And I know that this is a Charleston real estate based radio show, but you have to think about where all these folks are coming from and how much that might impact them and their ability to put even more money in their pocket to be able to pay more for real estate when they come here, which for a lot of them, our real estate's cheap or affordable, I guess would be the PC term for that. But you've got tens of thousands of homes that would normally recycle through the market, but instead just remain locked up, whether it's interest rate related or capital gains tax related. And of course, there are a myriad of other reasons why somebody that's owned a home for that long might want to sell, but chooses not to, whether it's health reasons, financial reasons, comfort level, stubbornness, fill in the blank, right? There's a lot of them. But, even if a small percentage of those owners decided to sell, we would still see a somewhat meaningful increase in available housing inventory without building a single new house, right? We've talked a lot about how really over the course of the past decade, we have just underbuilt, right? We have not put forth enough new construction properties to keep pace with household formation. And so what's interesting about this though, and I can probably hear some of you already saying, well, yeah, but that's only going to benefit the rich. Well, 90% of people that sell their home do not pay capital gains tax. So we're not talking about a huge portion of the market here, truth be told. It's really more aimed at long-term owners or seniors who want to downsize or homeowners that are in higher value neighborhoods or family who just they bought decades ago and now they feel stuck. Now, here's something really important. I want to make sure I get this out before we take a break. There's an important situation that a lot of families don't realize. If a spouse passes away, the surviving spouse and this is based on current tax law, and I'm not an accountant, right? I'm not a CPA. I'm not a tax professional. Talk to your tax professionals about this stuff. But here's how it goes. If a spouse passes away, the surviving spouse has 2 years to sell that property and still claim the $500,000 exemption. After that, the exemption drops to $250,000. That being said, the tax code allows for something called a step up in basis. So let's say that a couple bought a home 25 years ago for $100,000 and now it's worth $600,000. Well, when one spouse passes away, their share of the property value is stepped up to current market value, which dramatically reduces the taxable gain if handled correctly. So, in other words, you and your spouse bought a house for $100,000. That means you each have $50,000 in basis that you're adding to that equation. If the property is worth $600,000 now, then the deceased spouse's step up in basis would be $300,000 plus your initial $50,000. So now you have a step up in basis of $350,000. And if you go to sell it for $600,000, your gain is significantly lower on paper, which reduces your taxes. That is why you get a professional valuation of your property anytime there's a major life event. And it's incredibly important. And I know that's a little Debbie the Downer, but it's important information for you to know, right? So for homeowners that have significant gains, there are strategies like, again, adjusting the cost basis by documenting something like capital improvements, offsetting gains with investment losses. If you're diversified, it might make sense to sell something to make up for capital gains. Or, of course, if it's an investment property, then I would do a 1031 tax deferred exchange where I basically take that capital gains that I would have to pay and I'm putting it into another property. I'm delaying the inevitable, right? You can only escape so much, and death and taxes are not one of them. So, big picture, right? If lawmakers or policymakers truly want to unlock housing inventory, this is something that they should seriously consider. This is a powerful lever to pull. Fix the tax policy. You might free up millions of homes nationwide. So if you've owned your home for a significant period of time or it has grown in value significantly, and you're asking yourself the question of like, well, what would happen if I sold it? What would taxes eat up my equity? Does downsizing even make sense? I mean, that's a conversation worth having because every situation is different, right? And planning can save you substantial money in this process. So if that's something that I can help you with, feel free to reach out to me. My phone number is 843-800-0065. That's 843-800-0065. You can check us out online, listingsincharleston.com. That's my website, listingsincharleston.com. Or you can send me an email if you'd like. Brian, that's Brian with an I, at brianbeattyteam.com, Brian at brianbeattyteam.com. And then just lastly, check us out on YouTube and iTunes and Spotify and all our socials. We try and put as much content out as possible as is relevant to those that are thinking about buying, selling, or investing in real estate. So feel free to check that out. There's a ton of data there. I'm again your host, Brian Beatty. Thanks for joining me. If you haven't listened to this show before, just a quick backstory on me, I suppose. I've been selling real estate here locally for 20 years. Started out as a solo agent. Sold real estate by myself for several years, became the top agent in the Southeast U.S., and then started a real estate team that has now grown into a company that offers, of course, sales of residences, land all throughout the state, property management, investments, and private money lending. So really anything that you want to do with a house or a piece of land, we can help you with. And we've got all kinds of videos and content for you guys. For those of you that listen to the show, you usually hear me give out free reports. I've got something a little new for you today, and that is rather than just sending you some sort of static report that we get because we hire certain entities to provide us with things like statistics that no other company has, and we're trying to do everything we can to give our clientele a leg up on the competition. But what we've figured out how to do is to create a link so that anytime you check that link, the information gets updated as market trends change. So for those of you that are thinking about selling your home, Of course, we do a home equity analysis at no cost, right? That just helps you guys understand not only what it would sell for, but after expenses, how much cash do you actually have in your house, right? What can you do with that? And then we also look at something called a value gap analysis. And so what that means is you've got folks out there that are considering putting some money into their house before they sell it, whether that's repairs, renovations, updates. It's really tough for folks to really know what money will go the furthest, right? What is going to actually result in a return on your investment. And then on top of that, there are a ton of contractors in town. It's tough to find one. And when you do, are they reasonably priced? Are they going to show up on time? Are they going to do what they said they were going to do? Or is it going to be one of those nightmare stories where you hire somebody to do some stuff around the house and 6 months later, half of it's done and you can't get a hold of the person? Um, as somebody that regularly invests in real estate and flips homes and spends, hundreds, if not millions of dollars a year on renovations, I know what works. I know what doesn't. And so the value gap analysis helps our clients determine if you have a certain budget and you want to invest that into your house. Let's think about it from an investor's perspective. What should I do? What should I not do? How much is too much to spend on the things that you're thinking about doing? And so we then look at here's what it's worth right now. Here's what it's worth after you fix it up. Here's how much it's going to cost. And oh, by the way, you don't even need a budget personally for this because we have now arranged for financing. So if you know your home is in need of some updates, whether it's cosmetic or maybe there's some repairs that you just can't afford, you just can't get to it. Well, the last thing you want to do is be forced into selling your home and taking a loss because someone else is going to benefit from your misfortune. We now have the ability to set you up with financing so that we can get those things done to your house and then we pay off the balance at closing when it sells. So we've got some really cool things going on behind the scenes, some conversations that we've had that we think are going to help even more homeowners. So if you'd like more information on any of that, by the way, feel free to give me a call or text me. My number is 843-800-0065. That's 843-800-0065. Check out our website, listingsincharleston.com. That's listingsincharleston.com. Send me an email, brian@brianbeattyteam.com. And then, of course, check us out on YouTube and iTunes and all that great stuff, blah, blah, blah. All right. So let's talk a little bit about where we are as a market right now. I mentioned in the beginning of the show that the first 60 to really 90 days of our market are always important because in my mind, it kind of sets the direction for the rest of the year. Now, over the next 60 days, we're going to see hopefully we're going to see a lot of activity in our market. We should see a pretty big increase in properties becoming available for sale. And so that's going to be one of the things that we look at really closely is inventory. Or if you're, and you have to look at this from two different lenses, right? If you're a seller, you view additional inventory as competition. Of course, you're going to need to buy something and, you don't have to buy something, right? You could rent or maybe you have somewhere else that you're going. But obviously, inventory to you as a buyer means more options, more choice with more supply, less demand, lower prices. We're starting to see more and more buyers win the negotiation, I guess is the way I would put it. They are getting the seller to concede, right? And that's one of the big changes that people are kind of slow to wrap their head around is that we are not in this gangbuster sellers market that we have been over the past several years. We're just not. Now, you can kind of force that behavior by doing something like pricing your home at what the home is actually worth, because I read off last show that if you do that, if you take that pricing strategy and you actually price your home at what it's worth, it's going to sell in about a week and you're going to get 100% of your asking price. And 1 in 4 of those people got more than their asking price. But if you overprice it with the idea that like, well, hey, let's just leave some room for negotiability. We can always come down. Well, then you're taking about 9% off of your asking price, and it's going to take about 3 months to sell. If you're lucky, in some price points, it's even higher. It's even worse, and the negotiability is even worse. So one of the things that we look at is inventory, right? We use that to determine, is now the right time for me to put my home on the market, right? That's what we're talking about, is doing some timing here, right? And I'm giving you some tools to help you understand when the time might be right for you, aside from whether or not it's just the right time for you or not, right? We're talking about market metrics and trends that you can follow. And the first one is inventory, looking at it through the view of someone that I'm going to have to compete against. And then also, is there enough inventory out there that leads me to believe, if I do decide to make this change and sell my home, am I confident that I can find what I want? Quick little side note on that. There are so many opportunities right now for folks to find and do deals off market, meaning those homes are not officially listed for sale. You can't go to Zillow or Realtor.com or Redfin or even an agent can't go into the MLS and find these homes. They are off market properties. And it's becoming more and more common, where we basically do a two-stage process where a seller signs an agreement with a real estate agent. Maybe they're doing some work to the house. Maybe they're just not ready to actually have it listed for sale. Well, rather than have that be just like dead time and dead air, what those agents are doing is they're doing something called a brokerage exclusive listing first, where, hey, let me market this to my own database as well as to all the other agents in my brokerage and their individual databases to see if we can find you a buyer before it even hits the market. And I know a lot of people have jumped on this bandwagon, but here's the reality, and this is me being very blunt. I have a big old database of people that I constantly communicate with. That's what you get when you spend millions of dollars on leads and you do this for 20 years, right? We have a database of 30,000 people that check listings and check our website regularly. So anytime I go and I am about to put a property on the market for sale, I check that database and I say, all right, well, if I'm about to list this, $1.5 million home in Mount Pleasant, how many people have been on my website looking for similar properties? How many of them have been there in the past week, 30 days, 60 days, 90 days? Are they engaging in online behavior that leads me to believe they're looking for a home? And for those people, I mean, ask yourself the question. If you're thinking about buying a house and you're online and you're kind of waiting for new listings to hit the market, especially right now when you kind of have this feeling that there will definitely be more available in the next month, 2 months, but there are going to be more buyers and more competition. How nice would it be if an agent called me and said, hey, I've got something that no one else knows about. It's not publicly for sale, but I can show you the home if you're interested. That's what I think a lot of people are looking for right now. And yes, any real estate agent can do that, but their ability to tap into a network is going to depend on how long they've been doing this and how many leads they've generated that are looking for homes like yours. And so we go through that entire process with folks and we show them how that works. But again, going back to the original thing to look out for, it's inventory, right? Who are we competing against? How many options do we have to buy? And I'm here to tell you that whatever you see online, there is in excess of that for all the homes that are getting ready to go on the market that are in that preliminary stage. Or maybe they just choose to sell the home that way. I have clients that are just choosing to be a brokerage exclusive or a pocket listing for their own individual reasons. We won't divulge those, but inventory, like the number of homes for sale in Charleston, we've seen almost a 20% increase just in the first month of new listings hitting the market. We put about 2,300 new properties on the market in January, but in 2025 in January, a little over 1,900, right? And that's a pretty decent jump, right? We don't really expect a lot out of November, December, January, February. I've mentioned this on the show multiple times. I really like the idea of getting ahead of the game, right? I don't like necessarily following the herd mentality. If I see opportunity from a positioning perspective to list a home and I know that buyers are looking and they want something like that, why would I wait for everybody else to list their home and increase my competition? Something to think about. We're going to take a break. When I come back, we're going to talk about 2 or 3 other metrics that I would keep an eye on if I were, thinking about buying or selling and trying to, in some way, shape, or form, time in the market. This is what I look at. These are the things that I'm happy to share with you guys. So stick around as the Brian Beatty Real Estate Show continues right here on the Big Talker 1250 WTMA and WTMA.com. And remember, if you want to reach out to me, you have a question, you're thinking about buying, selling, investing, having a property managed by us, we'd love the opportunity to make the connection and help you in any way we can. So our number is 843-800-0065. That comes straight to me, by the way, 843-800-0065 or listingsincharleston.com. I always like to take a moment and just tell you guys that I appreciate you. I appreciate you listening. I appreciate those of you that reach out and ask questions, whether it's for just your own self-education or it's because you really do need some help from a professional. Whatever it might be, we'd love the opportunity to make a connection. Feel free to give me a call. My personal number, 843-800-0065. That's 843-800-0065. Or visit us online, listingsincharleston.com. That's listingsincharleston.com. All right, so let's continue this discussion here. We're talking about, if I were somebody that was not a real estate professional and I wanted to better understand the real estate market and to an extent understand the timing of it, right? When would be the right time for me to put my home on the market? We get these questions asked all the time, and they're legitimate, good questions. There's never going to be a perfect time. We do the best we can with the data and the projections that we see based on the trends that I follow. And for those of you that listen to this show for the past 13 years, I would hope by now you know that I'm a data junkie. I follow the market. I understand it really well. When people work with me, they work with a real estate market expert. And so as I'm going through some of these stats and some of these things that I keep an eye on, you can do the same thing. In fact, I can customize these data points for you in your area, in your price range, based on your situation, so that every time you click on the link, it basically gives you a new data points to review so that you can determine, whether it might be the right time for you or not. Again, if you want access to that, just call or text me 843-800-0065 and we'll get you set up. It's a super cool, very intuitive, what I would call pretty cutting edge system. So we're loving that. And I think the folks that are getting that information are really enjoying it too. All right. So we already talked about inventory. We talked about it a lot. What else do we look at? Right. Well, we look at the actual movement of people. We look at pending sales and we look at closings. Are we actually absorbing any of the inventory we're putting on the market, or is it sitting stagnant? Right. Well, I already told you that we put 19% more listings on the market in January than we did in the year prior, to the tune of, almost 400 homes. That's a lot. Pending sales were up 23%. In January of 25, we put 1,300 under contract. January of 26, we put 1,600 under contract. All right. Closings are kind of flat, but we need a little time for that to catch up. Really, the closings that we're looking at in January were for things that were under contract in November and December of last year. So ultimately, though, what we're after here is something called months supply of inventory. And that is essentially what we use to measure the health of a real estate market as to whether it is a buyer market, a seller's market, or just kind of a flat, little bit sideways market, right? We're not making big jumps in either direction. And so right now, our month supply of inventory is still at around 3 months, which on paper means that we are in a seller's market. But if you look at some of these other dynamics, it tells a little bit of a different story. One of those things we look at is the days on market. How long is it taking for property to sell? Right now, as of January, it was 58 days. That's up 16% from this time last year. But here's the deal. We went from a market that was crazy busy, tons of demand, hardly anything for sale. It shot prices through the roof. Interest rates were super low. Payments were super low. Affordability was super high. It was a great opportunity to buy and sell real estate. Maybe not so much fun to buy because you had to give away your firstborn son and buy a house without having to see it. And you can't inspect it and you can't appraise it. You just have to, trust, right? Well, we're not there anymore. Thank God. That was too crazy of a market, I think, for a lot of people. And certainly in no way, shape, or form sustainable, right? So where are we at now? We're at 58 days in order for a property to go under contract. All right. That's not the close. That's the go under contract. And, we got down to 14 at one point. But you have to remember that prior to COVID, we were in the 60 to 70 range. And that's basically where we are now. We're back to where we were before COVID, but with a bunch more money in our pocket in the form of equity. That's really where we stand if you owned your home throughout this process. Um, and so we look at days on market to see how long are these things taking to sell. Obviously, the longer things take to sell, the more negotiabilities buyers believe they have because there are more properties available, right? We haven't had a market for a few years where a buyer can say, hey, if you don't like my offer, I've got 3 other choices down the street. But now they kind of do. And it's going to get maybe a little worse as inventory maybe goes up. Tough to say. One thing that I will tell you is something worth watching, of course, is interest rates, but obviously the news that impacts interest rates. And I have to tell you something a little unsettling. And I'm going to have Derek Goulet come in here and really kind of lay it on thick because he's the expert on mortgages. But there's new information that has come out from the Mortgage Bankers Association that essentially says in 2027, rates are going to go up, not going to come down. In 2028, rates are going to be higher than in 2027. Right. So right now they're at like 6.1. It's the lowest it's been in, I think affordability right now or the payment is the lowest it's been in like 50 months. So you've got a nice little window of opportunity right now where we've actually seen an increase in affordability. Things are good for buyers. But they're actually saying that in 2027, it's going to be like 6.3% interest rates. And then 2028, it's going to be like 6.6, 6.7, 6.8. So we'll see. I mean, a lot of these projections are throwing people for a real loop. We're really having a tough time figuring out where in the heck this thing is going to go. And so what's happening is it's stagnating the market. There's fear. There's not a ton of confidence in the overall trajectory of the market. And that's a very true statement. So it causes people to sit back and watch and wait and try and figure out what that next step is going to be, either because they have it's because they have the ability to. If those that have to move don't really have that luxury, but you have a lot of people sitting on the sidelines that say, yeah, I could move anytime I want. I don't necessarily have anything pushing me out the door. If the right opportunity came along, I would very seriously consider it. That's where I think a lot of people are right now. And that's a very like 1 foot in, 1 foot out kind of approach to the process, because real estate, even now, even as we're seeing the scales balance, right, between a seller's market and a buyer's market, the stuff that's priced right, the stuff that's in good condition, the stuff that's marketed well, the stuff that has a quality real estate agent attached to it, it's selling in a week or less. The stats prove that. And they're getting 100% of their asking price. So there's certainly still a great way for sellers to capture, a great deal on the sale of their property and then go and turn around and get a good deal on a house they're buying because the market's starting to soften. But if interest rates go up next year and then the year after that, it's going to be tough to have a very optimistic view of the real estate market. That being said, affordability. Affordability is actually the best it's been in a long time. We had a really nice increase in how affordable real estate is. And so real estate affordability or housing affordability takes into account, there's an index that we look at, right? And so the index of 100% would essentially mean that the median income in a particular area is 100% of what is necessary to qualify for the median priced home in that area, given prevailing interest rates and a 20% down payment, right? Well, a lot of people don't have 20% down. Interest rates, although they're low, they're still 6+%. We are seeing some stuff in the fives, but the good news about all that is that we've had a nice little increase in affordability. So the last thing I want to ever do is use fear-based selling to assist anybody in a decision-making process. I frankly loathe it. It does seem, though, that at this very moment, with the information we have, the projection is for interest rates to be higher next year than they are this year, and for them to be higher in 2028 than they were in 2027. So if you're thinking about trying to time a purchase, let's have a conversation with a lender. Let's figure out whether there should be any need for some urgency. Or what might happen between now and the time that those rates start to adjust. Maybe they go down. The problem is it's a moving target. And it's really challenging for folks to sink their teeth into something, right? I feel like we're trying to nail jello to a wall at times with regard to the direction of this housing market. What I can tell you is that um, it's just normal. It's just a normal real estate market. Yes, it's more than likely going to take you a month or two, maybe three, to find the right buyer that's willing to pay the right price for your house. Obviously, those that are taking the more direct sale route and saying, "Well, we're just going to price it at what it's worth because we know a buyer's going to pay it, and it's going to cut way down on the amount of time I'm on the market and the frustration and the carrying cost and all of that." And we're just gonna price it at what it's worth, and we'll sell it in about a week. That's what the stats are saying. That's basically what's happening to these homes. Um, so affordability has gone up, inventory has gone up, but things are taking longer to sell, and the negotiability on those homes is becoming more and more apparent to buyers. And the data shows and proves that too. And that the average amount that someone's getting off their asking price is about 5%. 5% is about the amount that people are negotiating off of homes. Now, again, you've got for every 100 properties that hit the market right now, 33 of them, one third of the properties that hit the market do not sell. They fail to sell. Either they get expired, meaning the agent had their time, they couldn't get the job done, or the seller takes the property off the market and they just say, you know what, it's just not going to happen, or we've changed our mind, or you're the worst real estate agent on planet Earth, or whatever the reason is, they decide not to sell. So 1 in 3 of properties that hit the market are coming right off because they're not selling, probably because they're overpriced. Then with the 67 that are left, about half of them sell and they don't need to take a price reduction because they're priced correctly. And then the other half have to take price reductions and then they sell for below that amount. And it takes like 10 times as long to sell. So, really, what that means is that about 2/3 of our real estate market is either overpriced or improperly positioned to effectively sell. So, if you're thinking about selling your home right now, or you're thinking about buying a home, you just want to follow the market, look at the inventory, look at the affordability, look at the month supply of inventory, look at the negotiability, and then take a look at what's happening in your specific area, right? What is the comp environment for your home? How many people are you competing with? Have you had some recent sales that help support your idea of what your home is worth? Or have you had some distress sales? Have you had a neighbor that got a corporate relocation, or a neighbor that has owned their home for a very long time and they had plenty of equity and they sold it in a day because they didn't care? You'd so you'd be surprised at how many people do that hit the easy button, um, and just kiss away tens, sometimes hundreds of $1,000s in real money that could have gone in their pocket. So we like to try and avoid that if we can. We want to get you the most money possible. So if we can help you, feel free to give me a call, 843-800-0065. That's 843-800-0065. Or check out our website, listingsincharleston.com. I want to end the show with a little bit of like a PSA of sorts. Um, we as a state, right, South Carolina, made it onto Realtor.com in the form of national news about the excessive number of complaints that were filed by homeowners against HOAs. We had 568 complaints against HOAs, which, and to be honest, I don't have like a huge like barometer to check how much that is in comparison to other areas, but apparently it must be a lot because we made national news. And so it goes on to say that the top 3 complaints centered around failure to adhere to and or enforce covenants and bylaws, concerns about maintenance and repairs, and ignored requests to access information or view documents. Other complaints included concerns about allocation of HOA funds, disagreements about HOA fees and special assessments, failure to produce financial statements, failure to notify residents of board actions, um, issues related to HOA board elections, and requesting waivers or adjustments of violation assessments. The reason I'm telling you this is because I have seen in my 20-year career as a real estate agent some incredibly ridiculous and heinous behavior from HOAs. I have seen HOAs literally prevent properties from being sold or purchased due to their unbelievable uh, amount of just idiocy at times. But a lot of the time, it's just because they have no urgency and they just don't care. Now, that's not all of them, of course, but you do what I do for long enough and you become a little jaded with some of these companies because you know how they're run, you know how they respond, you know for a fact that if you need something quickly, you're probably not going to get it. It can be a major source of frustration. Um, and oh, by the way, I own a property management company and we manage an HOA, and it is not a picnic. Let me tell you that. It is not easy, but we do we do a good job for those folks. So here's why I even tell you this. If you're going to buy a home in an HOA, or you're going to buy a condo or a townhome that has regime fees, right? Anything that you're paying monthly, quarterly, biannually, annually, um, I have a guide that I put together about purchasing properties in HOAs that has some incredibly good questions that you guys need to ask so that you really understand what you're getting yourself into. Of course, if you work with someone like me that's a real estate professional, we're going to make sure that those boxes get checked and that we're crossing T's and dotting I's so that you have all the information. Um, but I still think it's a helpful resource for those of you that are thinking about moving into an HOA, or that maybe you're listening and have had one of those issues with an HOA. I know I certainly have. And so if you want a copy of that guide, just text the word HOA to 843-800-0065. That's text the word HOA to 843-800-0065, and I'll send over that guide on things that you need to know if you're going to purchase a property in a homeowner situation or homeowners association, not situation. But anyways, guys, that's my time. I appreciate y'all listening. If I can help in any way with anything we've discussed, whether it's information on the market, keeping you up to date with trends so that you can try and help time your next move, a value gap analysis if you're thinking about doing some repairs or renovations to your home, financing that's available if you don't have the money to fix up your home, any of that stuff. 843-800-0065 is my number. Or check us out online at listingsincharleston.com. Thanks for listening. Enjoy your weekend.
Join us for another edition of the Brian Beatty Real Estate Show next Saturday morning at 9 and Sunday morning at 10. Find him online at listingsincharleston.com. That's listingsincharleston.com. Or call him at 843-800-0065. That's 843-800-0065.